Resume our meeting. We have a couple of items that we would like to vote on at this time. I'd like to get a vote on settlement approval for item 4A. If I could get a motion. A second?
Second.
And a vote? Aye.
Aye.
And it passes unanimously. We approve item 4A.
Okay.
At this time, we'd also like to take a vote on move it to ask our legislative committee to address the liability and the cost liability for inmate usage. And we'd like to pass that item to our legislative committee. If I can get a motion.
I will second that if Bob will also include in his motion that we ask them to develop some kind of policy on what these inmates are used for.
Guidelines, guardrails. I agree. Can I get a vote? Aye. Aye. We pass it unanimously. This item moves to legislative committee. So our next item is report from the finance director.
Yes, if you go to page 8, will be the first page of my report. Page number 8 is the balance sheet for the health insurance fund, and this balance sheet is on the accrual basis of accounting, meaning it's similar to a business, but we do not close all the accrual counting, in other words, the runoffs and stuff for actuarials until the end of the year. So what we're showing, your most significant item right now would be your cash. You have a little over $19 million, and you've got, at the end of last year, if you go down several items, you've got a little over $1 million worth of liabilities. To give you kind of a perspective of how that's looking this year to date compared to last year, as of last November, you had $17.3 million worth of cash. So based on what information we have available, and the same information that Bob and Brittany's looking at, this fund's running quite well this year. Also, if we look last year from November to June, we went somewhere from 17.3 to 17.9. So from looking at it from the same November to November, because it's just November's balance sheet, we're looking from June, this fund's picked up quite a bit of cash, and therefore reserves. So you're looking at, let's just say $19 million minus $1 million reserves, about $18 million worth of reserves right now.
Can I ask you, what do we supply this cash account with? I know that we're putting in the money we forego by not having the large stopgap. My specific question.
This is help only. We'll go through the other.
What about my interest on this money? Does it come back in, or does my interest
we
go
give interest to these funds.
Okay, thank you.
Because they have employed. If we go, and we go to page 2, and I can kind of show you.
I'm good.
Show you the interest, because it's pretty easy to see that too. And that's kind of the same discussion we had in budget about arbitrage rebate, because the interest is up all across the county. So if you go to page 9 and you go about 4 items down, it says investment income. We budgeted, which is, we actually call it a plan. We don't do a true budget for this. $114,000. Page number 9. I'm sorry. The next page back. The next page back is actually the revenue sheet for your health insurance fund. If you go, there's like blue boxes below the last blue box. There's one right there that says investment income. It's budgeted at $114,900. This year to date, we've actually bought $336,915 out. That's how much interest earnings are up this year. That's why we were talking about earlier budget about the potential of arbitrage rebates. If you look down here, the things that fund this is the employees and the actual employee and the premiums paid by the county. That's your first large number. The second number is surcharges for if you're a smoker, you get charged a surcharge, or if your spouse has insurance somewhere else and you decide to take the county insurance, you get charged a surcharge also. And then under that's the retiree insurance payment. So that's your sources of income for this fund. The next page shows all of your expenditures for the fund, and one that
Let me ask a question about this. Because this is a employee insurance fund, the interest is designated back to this fund, and in the case of the trustee, is the trustee investing this money?
Yes, I'll.
And if it's a county department, they don't get the interest back.
No.
Yeah.
We give it to this one, and we give this fund the interest because it has employee and county premiums in there.
Right.
So we thought the most advantageous was to give interest to this fund. It was done that way when I got here, and I think it's the most appropriate treatment. That and the dental insurance. Now, on the job injury liability, one of the reasons we give it insurance is because it involves two funds, the highway and the county general fund. But individual departments would not earn interest. By and large, unless it's to these funds or for like the hospital sale proceeds, or required to be put in there for things such as grants or the cafeteria fund at the school, all the interest goes into your debt service fund because that's where we pay all our interest to for debt. But if we go on to page 10, and these are the different expenses for the claims and stuff. One of them that Commissioner Boyd or Chairman was asking about, if you go to the very last expenditure, it says specialized medical treatment. That's the amount we're estimating and the actual amounts paid to date for the one-to-one clinics. So it is broke out separately. You wanted to see the cost. So we're estimating it's going to be about $762, probably a high estimate. Year to date, we've spent about $259,000. That month, $52,000.
The name of your account is not as clear as it could be.
State chart of accounts.
But for others looking at it, they will not see that it is our employee clinics. And it's kind of important right now with all of the discussion on salaries that we can say, this is another bucket we're paying in for benefits. Is there any way we can, state chart of accounts, I got it.
We could probably rename it as state because it'll fall back in, but state when they put it on their report, it'll be named that. But if we go down each one and
it doesn't have to. We can talk about it.
I was going to go down each expense really quickly, but
are you saying that one-to-one is just a subgroup of the specialized medical treatment?
No, that's the cost of all the one-to-one for the clinics.
There's nothing called preventative medical treatment because that's.
No, it's the state chart of accounts. We can rename things, but no, it's never been named that. The state chart of accounts are rather generic.
Sounds like we're giving facelifts.
Right now, we've got thousands upon thousands of line items, so that's why the state has some of these names. But if you go to the first one that says handling charges administrative, that's what you pay Blue Cross Blue Shield for two things. One, to pay your claims, and number two, they negotiate contracts with providers. That's really the two large things they do for us.
Mm-hmm.
They do not do compliance for like your explanation of coverage, EOC. That's something Brittany will talk about later. We've actually got a firm looking at ours right now because that was one of my concerns, and I'm always the chief concern person, I guess is the best word, or preventative. The second one's vision administrative. I kept it separate because part of our health insurance fund is a vision plan that we give to them as the health. It is actually a standalone, so we keep it separate where we can track the cost. Your next one's the consultants, which is where we pay Mr. Shue for his work here, and we also pay for we have an actuarial done once a year on the clinics and any other kind of studies we have done. So we want necessarily something, it's not only him, it's several consultants. The next one's your big item, which Mr. Shue was talking about, which is your medical claims. And you can see them on here, but if you were to look at our detailed financials, these are folded up. We actually keep medical claims between your prescription and your actual claims separate, and we keep a lot more details. These are just the ones for people to generally look at. The next one we call fines, assessments, and penalties. We've got the state chart of accounts. What that actually is an excise tax that the in any form, fashion, or manner, and still is not helping us in any form, fashion, or manner other than giving the treasury money.
Trustees Commission.
Trustees Commission, what the trustee gets paid to invest your funds, hold your funds, and pay your funds. Fund, and the rest of it also would be for processing like your property taxes and all those bills. And it's a statutory amount, and it's in the statute. Does anybody have any questions on the health insurance fund? I know I went over quickly and very generically, but
I would like to request that at our next meeting, you could give us a brief overview of what the retirement insurance, how it works. I know that Yeah, the retiree, just next time, just a brief.
I could give you one right now, but it may be something you want to do on the next one.
Yes, that's what I'd like to do. I'd like to move that, if you could prepare a brief
What we'll do
overview of the retiree benefit next time.
Jessica, just note to have Amy copy the section out of our EOC on the retiree benefit. It's actually in our employee.
The reason I ask is that's changed over time, Mr. Hyde. I'd like to understand it better.
It's the EOC and it's online. The only real change in the last several years on that is at one point they started covering as credit existing TCRS credits.
Yeah, and we can get into it a little bit next time. Thank
Based
you.
upon one request that was approved, but, yes ma'am. The next one on page number 11 is your dental insurance, and kind of echo what Bob and Brittany said, this is a relatively stable fund. You've got about $1.3 million in there, estimated runoff liabilities of a little over 22,000, almost 23. As of, just to give you a comparative point, at June 30, this fund had $1.25 million in it, and it's last November at the same time had $1.175 million. So you still are picking up cash year over year for the last several years, I think, almost without any difference. I think this fund's been picking up cash every year, and I think the health has for the last several years. This one, the next page is just your revenue sheet. The same thing. The first one is what we charge the employees and what we charge the employees and the county pays toward the premiums. The surcharge, I can't remember what that surcharge is. I think that's where we just separate out because we have an old dental plan. I think that's the premiums on those, but I'd have to look to make sure that I'm telling you correctly. The next one's your investment income, and then your last one is the, what am I looking at here, page 12, just that's the revenue sheet for health again, I think. Yeah. You got the health.
It's on page 11, the dental.
Oh, that's the balance sheet, but you actually picked up the revenue sheet for the.
No, I think it's the way it's printed. I was having trouble with the printer before it came down here.
Either way, we'll bring you the dental one next month. It's very similar to the health. Page 13 is actually your expense on your dental fund. If you look at two things, the first one says handling administration. The same thing, we're estimating $32,000 some odd dollars a year. That's what we pay Blue Cross Blue Shields for paying your claims and for negotiating contracts. And they also, I guess it covers if you call the 1-800 number and you've got questions and processing. The next one's your actual medical claims, and then the last one is actually your trustees commission. And then the last one is your one you were just talking about, is your on-the-job injury and your liability fund. What it covers is for those it's a hybrid. Right now we have about $6.9 million, almost $7 million worth of cash. We're showing the estimated claims and judgments. That's from last year. We only do those once a year, but they don't usually significantly vary, so you're probably looking somewhere around about $5.9 million. To give you a perspective on this one, and it's more important to look at the November to the November number because this one gets the majority of its funding from the funds, and it gets paid once a year, so it's going to have a higher balance now that'll go down the rest of the year. Last November, it had about $6.3 million of cash. This year it had 6.9, so it looks healthy as far as we can tell. There's no real issues. Last June, you had about $5.45 million worth of cash. If we follow the existing trend, we think we'll probably be about $5.8 million of cash in this fund at the end of the year. We think we're going to pick up some cash unless there's a lot of claims out there we don't know about. The next page, the same thing. If you look at this for the first revenue account number is about a little over $2 million. What that's made up of is an amount based upon the agreed on percentage earlier that's paid from your county general fund and your highway fund to cover the estimated claims and costs for your on-the-job injury and your liability claims. Not your reinsurance for the buildings, but funds pay those directly, highway and county general pay those directly to the carriers. So this fund does not show those expenses that you were asking about. If you go on down, the same thing, investment income, we estimated 41 for the year. We've already brought in 126,000. It shows you how interest earnings are going. And then the next one, you have things like miscellaneous refunds where we get rebates back, and then amounts we recover from individuals through the court system or they pay us back. And then this one has a few more line items, but if you have any questions questions about them, it's got your liability claims, it's got your on-the-job injury claims, and it's got the operational cost for administering the actual OJI liability, because we administer it in-house versus, hiring a third party like Blue Cross Blue Shield for help and dental. Does anybody have any questions about those particular funds?
What is longevity pay?
That's what every employee in the county receives if you're full-time. The first year of service, you'll receive $300, and every additional year, $7,500 to a certain point, and then it goes to, I believe, $150, and then it caps off at $2,100. So it's something that was brought in place way before my time to kind of, I guess, reward the employees that stay here for a longer term. So reality is,
Had for teachers' career line, that was a state thing.
So I'd like to ask about and I assume these are the legal fees, the consultants for $70,000, and then we have legal services for $850,000. The budgeted amount I'm looking at. Is this where we're contracting out for legal services? It's $530,800 for the consultants.
I've got 3 different consultants that I pay out of that line.
And they're the ones that judge the claims? Or?
No, there's 2 different items. One of them is our insurance broker. His fee comes out of that. I have a report that I have to do every month. It's for Medicare set-aside, or Medicare reporting. And then I have Mr. Shoup, I pay part of the fee for him every month.
So this is part of his, and we saw part of it over there in the other.
So that's 3 different consultants that I pay out of that. The legal fees are all in the legal services line.
the legal fees are for outside attorneys who are hired to deal with on-the-job injury or liability cases. Not Grant County cases, but they're related to a liability or on-the-job injury case.
So are we contracting all of those out?
Most of them, yeah, because that's kind of a
Specialized.
niche practice.
I assume that. I just.
Yeah.
No, this wouldn't cover like your general cases that goes through the law director's office, like the county suit or this or that. These are the ones directly involving liability or on-the-job injury cases where we are being sued. Or settling. And then if you go on down, you got your.
What is the 51,600 other self-insurance claims? Why do you have other?
On-the-job injury.
That's on the job, that one that says other?
One above it's liability. You only have 2 really classes of claims in here. You got liability and on-the-job injury.
Can you touch up that account title also, where it's not just other?
Yeah, we can change them.
Just so it's easier to.
The problem we get is
understand.
these accounts are across several platforms, so we're gonna see who else is gonna affect.
Oh.
So we've already got a chart of account line, but you've got many funds and sub-funds, and these are just one. So
And this
when
is just rolling.
so if you change that particular line item, it may call it that all the way over here in the general
Yeah,
fund.
don't mess up anything.
So that's why these are less generic.
It just feels.
The only other way we can get around is to sign additional digits and name them, and then we fold them in, but the thing is that.
Got other things to do right now.
Well, they gotta be manually verified each year, and if there's a mistake, it could cause a potential large
Let's don't.
issue with the audit. That's why we generally don't rename things a lot. That's why we use these generic labels, and I just explain them on most instances. Now, when you go back to the budget, we'll put additional details on that same line, because it's in Excel, but, we'd be happy to, but I'm afraid it's gonna probably cause.
Let's don't cause any issues. No one else will ask again for another decade, I'm
Well,
sure.
there's only 2 classes in here, the liability one and your, on-the-job injury claims.
Thank you.
These are the only type of claims that we really have here.
So it's pretty much OJI and everything else.
Yeah, well, everything else is called liability. Yeah, I'm sorry. Yeah, everything else is called liability, it's liability, and OJI's the other. As I'm saying, that we've got financials that they fold up, but there's a lot more detail out there. I think it's very useful for the county over time.
Thank you. Is that the conclusion of your
That's the
report?
conclusion of my report, unless anybody has any questions.
Thank you. Anyone else any questions? We move on to old business, insurance equivalency.
Okay, that's it.
Educate us.
So I don't know exactly the title insurance equivalency. I I feel like what I'm gonna talk about doesn't exactly fit in that category maybe, but, so the federal government passed several laws right after COVID. There's the No Surprises Act, the Consolidated Appropriations Act, NSA, CAA, whatever you wanna say. Okay, so within these bills, people don't realize it affects health insurance. One of the requirements under the CAA is that we have an NQTL analysis done. It's called the Non-Quantitative Treatment Limits Analysis. That is the whole acronym broken out. With that, it is a very specialized thing. It needs to be handled by someone who understands legal language, but it is definitely niche. As you were talking about niche earlier, it is a very niche thing to be able to do an NQTL analysis. So, essentially, the Department of Labor is allowed to walk in here and say, give me your NQTL analysis. And you have to have it. If you don't have it, you will be fined. And it is really large. I cannot quote you the cost off the top of my head because it's very. So they have, I just got it yesterday. So I'm still sifting through. So what we've done, they've gone through, they've looked to see. So we all, well, you might not. Mental health parity, which people also like to quote the acronym, but mental health parity basically means that we need to cover mental health issues the same as we cover health issues in parity. That's what that means. NQTL looks at, okay, well, you say that you cover this at 20 or 80% or whatever, the same for both things. However, there's things that we can't quantitatively pull out. So, how much are doctors and mental health being reimbursed as opposed to a physical health doctor? So, all of these things, Blue Cross, I gave them a huge list that we had to send to this firm so that they could generate a report. It's multiple pages long. I will tell you, generally speaking, you all did pretty well. You did better than some of my other clients. Some of the things that I will, and I'm going to bring you a consolidated list, but just to give you a heads up, don't fret. Some of the things are things you have absolutely no control over because it's reimbursement rates worked out by Blue Cross. You have nothing to do with that. You pay them a fee. If the DOL comes in and asks for an analysis, we have it done now. There are some action steps that we need to do to make sure that if there's something they find out of line, we do have control of, that we have put forth our best effort in making sure that you are in parity. So, I'm going to have a consolidated list. I'm going to look through. I still have some more questions I've got to send back to Blue Cross. I know they are very annoyed at me and all of my questions. So that is one piece of it. They have said that they would do hold a meeting if we wanted them to go over the findings. Helpful for like Amy maybe.
My thought is the things that we can correct, just bring those actions to the board here and have those corrected, and the report done to give to the department would be the only two.
Okay.
It's my thought unless the board wants something different. Have them bring back the action items to you guys.
I think that'd be appropriate.
And then we'll file the report for the Department of, you say Department of Labor?
Well, you don't have to file it.
We'll file
You need
upstairs
to keep it.
We're gonna file
in case they
upstairs.
show up.
When we file everything upstairs in the archive, so loosely I'm speaking, when we file it, means they show up, we pull it out of our archive.
Correct, yes, and that's what happens. I will tell you that almost everyone, and I've heard this from multiple people who are doing these analyses, everyone who gets called on to provide the analysis, there will always be findings. There's gonna be findings. There's gonna be things that they're gonna find that still are not enough. Because when this was put in place, there are not, you all were asking for like, what is the process? We don't really know all of the steps of the process because it's so new. So I don't want you to worry that you're going to be called upon. They have hired more folks at the IRS to do these things. So it's a whole thing. So we're going to try to stay on top of it. Yes.
When we have to be in parity, does that mean we have to always come up or can we go down?
Go down. You could. You all have never had to, And I will say that what I have found on other plans, and anything that I see on yours from a high level, if you were to bring them into parity up, it's not going to cost you more. It's just so they're satisfied. There are certain things you have no control over, and such as, let's say I have an alcohol usage issue, I need to go to a hospital. The denial rate is probably going to be higher for people needing to go for substance or mental health use, because all of those are actually together. The denial rate is higher because a lot of those places are out of network. So you hire Blue Cross to give you the best deal so your folks can have great care. Well, guess what? A lot of these places overcharge, and they're like spa, and they're wonderful. There are other places who just get the job done. And then there's the in-between. So their network is a little narrower on mental health. But again, you have no control over that. That's Blue Cross's problem. So we could go either way. We'll discuss it, though. I will always bring those as options. So that's kind of that analysis. The other analysis is actually a lot bigger. They went through your plan document and just said, okay, we would really expect to see that this states that this is a non-ERISA fund, blah, blah, blah. So just certain language that they, as legal authorities in self-funding, would expect you to have a plan. And honestly, most of the changes I see are actually to protect the plan and protect you all and your ability to make decisions about what is and what is not covered, what will be to you. Again, I sent a list of maybe 25 more questions to Blue Cross just on that. They sent me their entire standard document. I've gone through and looked to see where you all are deviating from their standard document, and I still find some holes that they're not providing you all that they really should be per the NSA and the CAA and on and on. I can bore you for hours about it. However, all of the findings from both analyses, bring them together and say, these are the changes I think you should make to your plan. Most of them are not going to have anything to do with coverage. A lot of them are just going to be in that health. Do we have a definition for, I don't know, insert any medical term here. That's really what a lot of the changes are going to be, but I'd like to summarize it for you. And so, did it. I think there's some really good stuff we can add to protect the plan.
To be honest, the second item, remember we had the discussion, the first one's one we're required to do, but I asked you to approve, I think it was up to 10,000, because the second item, we've had this plan for years before my time. Many people's had their hand in it changing it. Blue Cross will tell you up front, we are self-insured, so they're not responsible for the language. That's why I've asked the plan if we could send it to this group to look to make sure they thought we were in compliance everywhere. So it would be my request, if possible, for the board, unless it changes your coverage in some significant way, to take all those recommendations and fold them back in. Because right now, my concern is that, as she's saying, there may be some small non-compliances in that we can fix.
Just a caveat on what David just said. Back when you had stop loss insurance, it was kind of set in place. Covered. In other words, you can't just say you're going to cover something in your policy and it winds up being a huge claim and you expect the stop loss company to reimburse you. Well, that's gone because you are the stop loss insurance company now, basically. So I think David's right on the point that for that reason and what he said, because we sat through many of these meetings and there's been times that there's been amendments to come to the will not pass. So there's been changes. And so I think it would be good to get this back in compliance for those reasons.
Is this once and done?
Nothing's ever really just done. But I do think that these items, pending any other legislation that might get passed at some point in the future, which, you know, things don't get passed really fast nowadays. It takes a really long time. So I wouldn't expect that you have to go through this every single year regarding the plan. Now, the NQTL analysis, yes, we have to continuously do this. Every year we have
So
to
they
do it
created
anyway.
a whole nother,
A whole nother
very
administrative burden.
detailed.
Yes. Yes.
And I've got a question directed to the required one.
Yes.
So if they walk in today and say, I wanna see it, you've got a rough out of one that's been prepared. So we provide them with this. Where are we at compliance wise? And what kind of fines would we be looking at right now?
I cannot quote the fine immediately off the top of my head. The most important so Amy actually already has it in her
I need to
inbox.
be in the loop on those.
Absolutely, I will make sure you get it. So that's the general report. As far as what changes can you put in place, that you put forth that best
That's
faith
fine.
effort, yeah, we want to make sure you do
Making
that.
progress towards.
Yes, absolutely. I actually don't think there's a lot of it's going to fall on Blue Cross.
So when do you anticipate a final version of this required one?
It's on me to put it together for all of the changes. I was trying to condense both things that we need to get done together. But that report should suffice for now, if they were to come in. And then anything that we need to change, that is, maybe a week, probably less than a week. I should have a list of those things that we really need to do.
I would have forgotten about it by then,
Oh, okay.
so that's fine.
Okay, but yeah, no, we will, I actually, that spent most of my day yesterday looking through that analysis plus the whole plan document analysis.
Yeah, one of these required items, please,
Yeah.
make sure I'm
Absolutely.
in the loop.
Yes,
So by and large,
Yeah.
the county stuff was, for the first, the required report was okay. The second one's more that we just need to change a lot of language to make sure we are in compliance if there was a complaint or whatever's going on.
right. Again, a lot of the stuff for just the plan review, the one that wasn't required, a lot of them we need to add some definitions. You don't have a statement in there regarding, what's it called, the IDR payments, the independent, I don't remember the whole acronym, again, more acronyms. But there was a lot that was put into place where someone could, if they didn't want to, if the physician didn't want to accept the payment they received, there's an entire independent process that goes through. All of that language needs to be in there. There are also things they found that are not legally required by you to define in your plan, but it doesn't hurt to do it. So my recommendation would be just go ahead and add it. It's an act, like the Women's Cancer Health Rights Act. I think that one you do have, but you don't have one about GENA, which is genetic. There's a lot of different little things I just think you should just add to your plan document. And Blue Cross has a lot of these things in standard language in their original standard. But again, like David said, things are just kind of deviated from their standard, so we just want to kind of match some of them back up with what they had.
So, and I hear you when you say the GENA. Does that mean we're going to start paying for genetic testing? Okay.
GENA is more about protecting. Like,
Okay.
if they find out about your genetics, we're not going to come after you. Like,
Okay, that's.
Yes.
Then my other question would be, you're going to be able to summarize this in the next week or so. Our meeting would not be, because we skip every other month. Should we come back and take care of this next month in case they come in? Or are we okay to wait?
I just wait to see what comes out of it, then we can always call one. I wouldn't do it
Okay,
now.
just let us know.
She can just let us know if there's something alarming she finds we think we should
Okay.
be meeting.
So if we don't hear back from you, we'll readdress this in our next meeting in March.
You will hear back from me, but yes, I promise.
If you think we need to address it sooner,
Okay.
let us know and we can call a meeting for sooner.
And I also want to give you all, just so you have for your records, for transparency purposes, paper and analysis. You need to see what they actually typed as well on their
Yes,
paper.
I would like that.
So I'm going to give that to you all. I just don't want you all to look at it and go, oh my gosh, that's a lot, because it is very detailed.
Okay, thank you.
So, yeah.
You can trust if she calls me and says there's significant term, the first
I
thing
know.
I do is call you and ask you.
I just wanted it on the record that we're in good shape. Okay.
The only hiccup is when, in the world, when y'all hear we're gonna send something to Blue Cross, I know what you hear. When you hear that, what we hear is, we're sending it to Blue Cross's legal department.
Yeah.
That's another end. And sometimes there are huge, well, we'll get back to you. We'll get back to you. Or no, you cannot do that because it's not in, our attorneys tell us we can't do that. And
Yeah.
anytime we deal with a large organization like Blue Cross or United or whoever, we run into that. When we're dealing with independents, the client writes their plan and it's in stop loss or whatever, it's very fluid, but under the contract you're under with Blue Cross, they are where them sitting in particular. It takes us a lot longer to drive a truck through the tunnel than anybody else.
It's
So-
not our Blue Cross rep, it's not Scott's fault, it's always the legal department, someone he has to go through. That's always the
I
whole
think you have to go through a black hole to get to their building.
Yeah,
It's
yes, I understand, thank you. So is that the end of?
That's everything. Do you have questions, that I've, not yet?
Just wait.
Okay, all right. I don't expect to come to you all with a list that says, we need to start covering these $1 million claims. I don't think it's that kind of thing. I really do think it's more definition and making sure it's very clear the claims on Blue Cross, as far as reimbursement rates, things like that, with no control over drug denials. They handle prior authorization. They handle all of that. So,
Okay. Thank you. Very good. If there's no other questions, I will make a motion for adjournment. All in favor? Aye. Thank you for your time.
I truly appreciate you sitting through this.
I'm surprised she didn't leave after.
Yeah, I thought you was gonna be out of here like that.